Buying off the plan in Perth with low deposit can generate huge capital gains, without ownership. Can I actually make a fortune buying off the plan in Perth with just a low deposit? Let's find out. Buying off the plan in Perth can be a game changer, especially if you're on a budget. The idea of securing a property with a low deposit and then watching its value skyrocket before it's even built is incredibly enticing. But is it really possible to make significant capital gains with such a small upfront investment? Hi, I'm Simon Atkins, your brand new off-the-plan apartment specialist in Perth, helping you with your off-the-plan purchase with relevant info and options to help you navigate the specialist part of the property market. For many people, getting into the property market seems like an impossible dream, especially for the first-time buyers, for those with limited funds. The common perception is that you need a huge deposit and a strong financial history to secure a mortgage. And when you think about buying off the plan, it might seem too good to be true. How can you be sure the property will increase in value before it's even built? The traditional view is that you need a 20% deposit to avoid paying lenders' mortgage insurance. But with off the plan purchases, some developers and lenders offer the option to pay a lower deposit during construction. This can be as low as 5 to 10% of the purchase price, sometimes just $10,000 or less. And the idea is that you pay this deposit up front and then the balance of the purchase price is paid once the property is actually completed. I can tell you that right now in Perth, people are purchasing off the plan apartments and making a hefty profit by the time they actually end up purchasing the property, because we're seeing this all the time from people that bought a year, 2 years ago. This can work particularly well in larger developments where the apartments increase in value, not just by the market increasing, but also because the developer increases later apartment sales in the same development. Quite often, instead of having a constant price across the development, the first release is then the lowest prices, and then each release increases after that. In essence, once you've put down a deposit, the developer's increasing future apartment sales and that development will work in your favour. So developers are always moving the price accordingly to maximise the development's success. Because it's a commercial enterprise, they're always looking for the best price that they can get. So once you're in, they're working for you in a sense. The potential for property value appreciation during construction is what makes off-the-plan purchases so attractive. If the property market in Perth continues to grow, the value of your property could increase significantly before it's even built. But there are key factors to consider when choosing a development in Perth. The longer the period of time for you securing the property and the completion date is generally a better option at the moment, because this gives you time in the market to maximise and gain before you actually settle on the property on completion. So at the wrong time of the market though, that would be not such a good thing. So let's consider an actual scenario. Imagine you buy a property off the plan in a suburb that's expected to boom in the next few years. You pay a $10,000 deposit on a $389,000 property. So this was one of many scenarios in a development we are currently selling actually. The client put down the $10K deposit in early December. The developer has increased prices further on the apartment releases in that development since. As a result, this apartment is now worth $440,000 because that's what we're selling the same types of properties for in there now. That's an increase of $51,000 from the original purchase price. And that's after only 4 months. There's still 2 years to go until completion. As an added bonus, because of the price of this apartment and the fact they purchased it before construction actually started in this case, it was completely free of stamp duty. It's now in construction, but you'll still save up to 75% stamp duty, which is still an awesome saving. So this is the aha moment, realizing that with the right strategy and a bit of planning, you can make significant capital gains with a low deposit off the plan purchase. Of course, it's not without risk, and there are many factors to consider before making a decision. If this strategy interests you, I'm offering a free consultation with me for the first 5 people only to take up this offer. So just message me, strategy session. My contact details are below in the description, right below here. So to sum it up, buying off the plan in Perth with a low deposit can be a smart move if you're looking to make significant capital gains and you want to use a small amount of money to leverage into something of a much larger value. It requires careful planning, research and a solid understanding of the market, but with the right approach, you can unlock the potential for huge gains and huge returns on your investment. Don't forget to subscribe for more valuable insights into the Perth property market.